For all you Apple skeptics out there, Rolfe has news for you. It's going higher, or so he thinks. Rolfe Winkler, heard on the street. The stock's cheap. Is that what you're telling me?
Buy the stock, Newmark.
Buy the stock? I can't buy the stock. You know that.
I wanted to say buy the stock yesterday,
but I couldn't. So just to put it into context, Apple peaks like 2 weeks ago at $640 or something like that, right? It then trades down. It was like 580 yesterday.
580.
And now it's back up to like 605. It's up 4% today. And you're saying, you know, there's no problem here.
It was a great opportunity. Getting back down to 580 was a great buying opportunity for people.
Now, to put it into a little bit of perspective for people, the company is the largest company by market capitalization in the world, I believe. It has a value
$560 billion
$560 billion
market cap.
And there are analysts out there like Gene Munster who go, you know what, this is going to be America's first $1 trillion company, perhaps the first $1 trillion company of all time. Are people smoking something?
Look, I think there's room to grow here. There's still room to grow. The interesting thing about Apple stock is, despite, if you're just looking at the price, if you're just eyeballing the stock chart, that's not a complete analysis, right? You can't just say it's expensive because the stock's done this.
Right.
You need something in the denominator. You need earnings. What's the price doing relative to earnings?
Right.
Over the last 2 years, what's really fascinating about this stock isn't that the stock has gotten ahead of itself. It's that it hasn't, earnings have been running faster, right? It hasn't been running ahead of earnings. It hasn't been able to keep up with its own earnings, is the issue. But 2 years ago, it was trading for 20 times earnings. Stock is has more than doubled, yet the P is now down to 13 times.
So that's X cash though, right?
No, that's with cash.
That's with cash.
That's,
so
that's the true market cap.
If you take the cash out,
it went from 16 times to about 11 times.
Okay. So you're going, look, on basis of traditional multiples, it is cheap. And yet, let's step back and say, how do we come to the value of any stock price? They're really just sophisticated discounted cash flow models, correct?
Yeah. Past earnings are not a guarantee of future results,
right.
No doubt.
And the value that very often matters is what, I don't want to get too technical on people, but it's the perpetuity value of the free cash flows, right? And so if you're buying Apple stock and you think it's going to $1 trillion, you have to believe that it will grow its cash flows into perpetuity at some rate, correct?
That you think, yeah, sure.
Right? So the prospect.
I know where you're going with this, Evan. You're saying the handset. You're saying the handset, the phone market. You look at Research in Motion. You look at Nokia. You look at these companies, Palm. All these companies. The handsets is where companies go to die. Is what you're going to say.
No, you're saying that, but you're making part of my argument for me. Look, the reality I say about Apple.
I'm saying that's not going to happen.
I say something like this, which is when you start talking about values on companies of $1 trillion, when you start looking at the profit margins that Apple is enjoying, when you start going, you know what, it's a closed system type, as opposed to, say, Google, which is running kind of on open platforms. At some point, the laws of capitalist economics would argue that there will be price competition and that at some level that will begin to eat into Apple's margins and its revenue growth. That is what capitalism has taught us. Are you fighting the rules of capitalism, Rolfe Winkler?
Apple's rewriting the rules of capitalism when it comes to handsets right now.
So trees grow to the sky.
There's cheap Android handsets out there. There's cheap Android handsets, and the iPhone keeps taking more share. How do you say it's $19.99? Give me that doesn't make any sense.
Well, I don't know.
13 times earnings, Newmark.
Look, I'm not going to argue that the current multiples are expensive because everybody would take everybody would take.
I think
the point
you just made my argument for me.
But just because it's not expensive in the here and now, the reality is that they've had a great run. Correct? Apple's had a great run, but they are tied to product cycles, right? And the reality is that at some point in the next year or two, maybe the product cycle won't work out that well for Apple. Do you believe that's a possibility?
Sure, it's a possibility, but the stock is cheap enough that you're paying for that, right? You're right. It's baked in there. The reality is what Apple's done with handsets is it's changed the way the market works here, where it's giving you, instead of just a piece of plastic, it's giving you a small computer, right? And people who use an iPhone, people who use an Android, they tend to stay with that ecosystem, right? And Apple continues to build such a great ecosystem. Then you've got the TV that could come, right? We're going to get TVs into households potentially.
I'm a little worried about you.
We'll sell more iPhones. We'll sell more iPads. We'll sell more iPhones.
He's been drinking at the Apple well a little too long.
I'd say 13 times earnings is a good.
But time will tell whether Rolfe
price to
Winkler is
pay.
right or my skepticism holds true.